All right, welcome everyone. So this is my thesis for Pfizer. I have to say that I am bearish on the company. If you're bullish, I fully respect it. And hopefully this video is going to give you some food for thought on your thesis. So we're going to look at everything, like fundamentals. We're going to look at dividends. We're going to look at free cash flows. We're going to look at the narrative. We're going to look at the recent news in regards to GLP-1s. And well, here is my thesis, by the way. You can find it in the description of the video. And I'm going to start straight away with the main points. So the main reason I am bearish on Pfizer is not because it's trading cheap. Actually, if you look at fundamentals, at valuation ratios, they look amazing. You know, on a price to earning basis, the company is trading at 15 or 16 PE ratio, which is crazy cheap compared to the historical back in 22. You probably know what happened back then, where the company was trading relatively expensive. So right now, the company looks extremely attractive from a valuation perspective. That's not my concern. My concern is that the downward momentum that we are seeing here, if I zoom in into the chart, hopefully you can see it, that this downward momentum, it takes more than cheap valuation. It takes more than high dividend yields. It takes more than free cash flow to turn around that. You don't turn it around with a 7.5% dividend yield. And why do I know that? Well, currently, the company is cheap, like right now. So why isn't the share price rallying up? Is it because, do you really think that you're the only person that has found this treasure, undervalued, and you're the only one looking at these valuation ratios, you're the only one looking at fundamentals? No, of course not. Funds, both hedge funds, investment funds, anything over 100 million in asset under management, they have analysts that are on the market every day. And this is not a penny stock, That argument, which is usually made by investors in the likes of Barry, saying that, yeah, the company, it's extremely cheap, and I'm buying it because the funds haven't discovered it yet. And that's true for penny stocks, particularly those trading abroad. But not for Pfizer. I mean, probably you have a vaccine by Pfizer. So that's not the type of company where you can say, the street is sleeping and they don't even know that this is a cheap stock and eventually they will figure it out. I don't think that is a legit a legit argument for a bull case. But it's my opinion, so I may be wrong. So my point is that to turn around the 60% decline over the past 2 years, which is crazy, to turn around that, you need more than fundamentals. You need a narrative, a strong narrative, particularly hype. I will be direct, so I don't want to faff around. Hype is what the stock needs. And I believe that the best shot the company had for that was danuglipron, however it's pronounced. This was an oral GLP-1 pill for weight management. So why is this interesting? Well, Eli Lilly, the number one stock in the healthcare sector by market cap, you're going to see that in a moment. It's just released that, I don't know how you pronounce those things. I will be honest, I don't know anything aside from the superficial information that you see on these press releases. I don't know what's behind that. I don't know how is this better than Novo's oral version of Wegovy, which, by the way, they announced just 3 days later following Eli Lilly's announcement. So my point is that Pfizer had a shot at challenging the duopoly that we're seeing in GLP-1s, particularly weight management and diabetes. And with this news that they discontinued this program, well, I think that was the last shot that the company had to bring excitement, at least in 25. So this year. I want to be very direct. My investment time frame is not in the long term. So I have a short-term time frame. Short-term, what does it mean? Anywhere between 3 months is the shortest, and I had a few stocks that I sold around that, particularly those were my own options, and it goes up to 24 months. Anything above 24 months, to me, doesn't make sense because I don't have a lot of cash. I don't have my portfolio is peanuts compared to probably yours, which means I have to be extremely aggressive with my investment strategy. And that's the main reason I'm not recommending anyone that's watching this video to follow my bets. It's because I take degenerate risk. There is no doubts on that. And that's why I want to play Pfizer with out-of-the-money puts. Not now. I'm going to explain later why right now is not the best time. Okay, moving on. So, as I said, yeah, valuation metrics. So, patent cliff, this is another risk for the next 5 years. I think I have here a slide. You can see the different products. So, these are both medicines, drugs, or injections. And you can see that for 2030 in the US, we have about 8 approximately. The one that really sparked my attention was Eliquis, which is used for making the blood thinner to avoid clogs. I don't know. You see what I mean? I don't know what's behind those drugs. And I will be honest, the reason why I don't need to know that is because I look at the earning call transcripts. So anything relevant in those transcripts, particularly in the Q&A session, is going to tell me that, so investors are talking about this drug, which by the way they did. Analysts, sorry, are talking about this in the Q&A, which means it's important. So that's why I focus there, and I don't focus on this one. Yeah, and if you're a bull, and if you think that I am doing things wrong, I challenge you, and I want to ask you now, tell me, why do you think this drug is important for the company versus this one? Is this a legit question? I don't know, and I'm upfront. I got no clue, and to be honest, I don't have really an intention to learn all the biotech stuff behind that, because I don't have time for that. I have to move on. I have to analyze. I have to screen through stocks. So that's why I don't go into the freaking details. Anyways, Eliquis loses the patent in November 26. However, some of the compounders in the US, I think you can see note 4. We're going to see this in the thesis in more details in a moment. Is this just the introduction? And is this already like 5 minutes? I'm sorry, I just go into too many details. My point was that some of the compounders in the US reached an agreement with Pfizer to not start production up until end of 28, some of them up until 2031. So even though this drug is the top seller, is the, I don't know how they call it, the blockbuster for the company, and it expires next year, the patent, I don't think that the company is going to be hit by compounders. You know the patent cliff, where sales drop significantly once the company loses the exclusivity for that drug. All right, so moving on, the main reason I'm bearish is not because of the patent cliff, but it's because how the company is reacting to mitigate the potential revenue loss. Again, I don't believe it's going to be visible in the near term. My time frame, 3 years. I don't think it's going to be like that visible in the income statement. But my main concern is the strategy used to mitigate that is by acquiring companies. And I don't like that. I gotta say, it's my preference. It can be different for you if you're a bull on Pfizer. But I don't like acquisition, mainly because it comes with a lot of non-cash expenses. It also brings debt. And I have here a few charts that are quite interesting. So total debt for the company. You probably know what happened in 23. We had the largest acquisition in the history of the US, which was Seagen for $43 billion. I don't think it was the biggest, but I know it was one of the biggest, maybe top 3. Let's say top 3. The thing is that the company used debt for that acquisition. And you can see here in the balance sheet, you can see the significant amount of debt. And of course, I'm not surprised by the 4.5 or 5.5 billion programming cost savings. We're going to see that in a moment, the exact value. And of course, the company has to cost cut in order to prevent the impact that the interest expense has on net income. So you can see here, this is by year, this is the interest expense, what the company pays for interest on their long-term debt. And that's insane. I mean, it's 3x since 22 last year. And the main concern, and this is key for my thesis, is that if the company plans, which by the way, if you look at the latest TD Cowen annual healthcare conference, that's what the company is planning to do. They're planning, this is what the CEO said, yeah? So our acquisitions are by year 2030, approximately 20 billion of revenue in all our calculations. In other words, they plan, we have a baseline of revenue. So on top of the baseline, they expect 20 billion from acquisitions, which is great because he estimated 17 billion in losses because losing those patents that we have seen on this chart. So some of them in the next 5 years, I think they're like about eight or 10 drugs that are losing those patents. So yeah, my concern is that if the company is going to double down on acquisitions, this issue with this is total debt, and this issue with interest expenses is just going to increase. Let aside the non-cash expenses that come along with these acquisitions, particularly if you do a bad acquisition. I'm not saying that the company is going to do that, but you have to consider that maybe an acquisition, maybe they can overpay for that, and a few years down the line, the fair price is not where we thought it would be, and then they do a write-down. So you have to take into account that acquisitions, they bring risk to the company. They can bring, of course, rewards, but they bring a ton of risk. And that's why I don't like them. I like the company to grow organically. And speaking of growth, organic growth, the company has about 115 drugs in the pipeline. 115. That's insane. So these are, by the way, these are not drugs that are that the company has in their portfolio. So the ones that they have, some of them, we're going to see them in a moment in my thesis. I can show you very quickly. I think I have them around here. Well, you can see them. I'm going to go into more details in a moment. But yeah, they have around 115 under development, 5 in the registration process with, I believe, FDA, but you also have other foreign entities. Phase 3, they have 32 drugs that passed. I think they passed or that they are about to try. Let me see. No, that they are about to go through phase 3. So yes, there is a lot of stuff in the pipeline. I'm not saying that there isn't. And you will see later on in my thesis that I actually talk about some of that, some of the things that I believe have potential to grow, to bring revenue growth in an organic way, which means the company doesn't have to acquire other businesses. You know how acquisition works. So I do think that here is where my bear thesis can fail, which is one of these products, one of these programs getting, a lot of success and turning around the sentiment. As to how probable is that, I believe the chance is low, I gotta say. And this is the risk. So this is a gamble. That's why I'm saying I'm very, the risk for what I'm planning to do is extremely high, because I simply do not understand, and I do not want to spend my time in understanding what's in the pipeline. It's too complex, and I don't understand it. So it's, I know my strength and I know my weakness, and my weakness is that I don't have the patience to learn bioscience and all this crazy stuff. I mean, I got no clue about that, let me tell you. So leaving aside that, let's go into the thesis. Is there anything else? As I said, the quick turnaround, the danuglipron, so the oral GLP-1 was the best shot. And the reason I haven't bought any out of money puts, well, I'll give you more details in a moment. All right, so let's go. Let's do first the company overview, and just for those that are new to Pfizer, because maybe you don't know what the company is all about. So we have a company that, it runs its commercial operations in 3 groups. So we have biopharma, we have PC1, and Pfizer Ignite. Of course, this is the main segment because you can see 62 billion in 24, up from 58 billion in 23. PC1 is just 1 billion, so it's nothing. And this is a unit that helps other companies to develop manufacture drug ingredients. And Pfizer Ignite is like a consulting business that supports, small biotech firms with R&D. So not much there. Within biopharma, which is the main segment, we have 2 main parts: US commercial division, and we have the international commercial division. And I have a chart here. I'm sorry, I hate Reddit. I don't know. I had here a chart showing you the breakdown between US and international revenue. And for some freaking reason, it's not letting me show it. Look at that. You're looking for an image. It was probably, it's so annoying, and yeah, that's why I have the board. I don't know how Reddit works. I gotta be transparent with that. All right, this is the breakdown of international versus US revenue, and you can see that back in 22. Guess why? You had international revenue significantly higher than US revenue, and this trend is changing now. So of course that's because of the 2 drugs related to COVID. I don't know how to pronounce those, Paxlovid. I think they are here. The oral drug, and then you have the injection. So of course, those two, the sales are decreasing significantly, which makes sense considering that the pandemic is almost gone. Although you still have waves, don't get me wrong. So, all right, we have, as I said, yeah, these are the two. So Comirnaty, however that's called, that's the vaccine, which by the way, I think I had this vaccine. And then you have this, the Paxlovid, which is the pill against the virus. So there you go. China, interestingly enough, was the biggest market outside of the US last year. That was 4% of the overall revenue. And 23, we have Japan. That was the highest in revenue. Thing is that in the 10, by the way, this information is from the 10K. It's summarized with ChatGPT, so it can be wrong. Take that into account. China, we have that Pfizer said that they have strong pricing pressures from government programs that are encouraging the use of generics. So that's not particularly good, but it's 4% of revenue. Definitely, I don't care about China, I gotta say. All right, so the thing about revenue is that if the dollar gets weaker, and we all know what's going on in the US for the dollar to get weaker, hint, hint, tariffs and uncertainty and people running away from the dollar because it's no longer a safe asset and going into gold. By the way, gold had yesterday the largest drop in the past 10 years or 15 years, which is crazy. However, I'm still bearish on the US dollar because the trade decision between the US and China, I don't think is going to be confirmed anytime soon. And well, I'm not going to do a macro analysis now, but I think China is absolutely not looking for any tariffs on their imports. And the US has just chickened out and they say, we go from 145 to 60 or to 50 maybe. And I think there was a Financial Times article that said that range between 50 and 65. And China is saying, what? There were no discussions about the 50, 60. I don't know what you're talking about, which is crazy. So I think China is looking for zero tariffs or close to zero. And I think, yeah, that's going to, the uncertainty is still going to be around for the next at least month. And that's why I think the dollar is going to be a bit pressured. In any case, it's not part of my bear thesis. I don't care about the dollar going down as much because, yes, if the dollar goes down and you have the situation like in 22 where most of your revenue is made in Europe, then that's great because you report in USD. And if the euro is stronger when you transform it into USD, you make a lot of money than if it was stronger. So in any case, we have that low chance. Trump chickening out for tariffs, market will rally. So US commercial division, we have primary care, we have specialty oncology. So you probably know this. I think I'm not going to go through all the details about the company. I'm gonna leave you to do that because otherwise the video is going to be absolutely unsmokable. So I think the most important part here. Let me just go to the important parts. If you don't know the company, I do recommend you have a look at this thesis. It's going to help you, and of course at the 10K, which is the go-to document. So something interesting is that the company has partnerships. So for the COVID-19 vaccine, you probably know the partnership with BioNTech, where the company splits costs and profits 50-50 with BioNTech on different regions. I think Pfizer doesn't have rights on these regions to sell the vaccine, which is interestingly enough China. So that's a big market. Eliquis, which this is the most sold drug. Let me just have a quick look. I'll show you. It's sad if I go so quickly because it means I looked at this 10K for the past 2 days. Fuck's sake. I already know it by heart. Okay, maybe not that much. So Eliquis, there you go. Revenue 7.3 billion in 2024. That's the global, up 10%. And you can see the split by region. So US, it's most of the revenue, 4.8. International, it's 2.5. So this drug is the one that I said before is going to lose patent in November next year. That's not particularly encouraging. However, in the footnotes, and I think I had here, if I go to the thesis, there we go. So there's a settlement that allows some generics to launch on April 2028. So the company is still safe in this regard for the next 3 years. And if certain patents, they did mention a risk if certain patents are overturned in court, because I believe that there is still a case. So generics could launch as early as next year. I really don't base my bear thesis on this. I couldn't care less. My bear thesis is simply that the company doesn't have anything that is exciting for investors to turn around the sentiment. So imagine that they are able to delay until 28 the generics. That's not going to move the share price. Yes, it's going to move it in 1 day or 1 week, but it's not going to move the sentiment. So all this pressure, all this downward pressure, you need something huge to change it. And I just don't think that, winning cases against your competitors in courts, I don't think that's going to be enough to turn the sentiment. So what else do we have? Yeah, we have, as I said, there is another drug there. I don't even know how much is the revenue for this. Let me just check. McDovie, is it even here? It's not even in the top list for revenue. Maybe I don't see it now. No, I don't see it. So yeah, that's just the footnotes. I do read them simply because I think there is relevant information like for Eliquis. All right, so moving on, we have the pricing pressure. So this is another headwind for the investor sentiment. You probably know the IRA changing how Medicare handles drug costs. So we have a threshold in place for about 2,000. So that's how much patients can pay maximum out of pocket. And anything above that is going to be split between Pfizer and I think it's the Medicare. And Pfizer, by the way, on anything above 2,000, they have to provide a 20% discount. And anything under that, under 2,000, they have to provide a 10% discount. And we have a few drugs that are actually top sellers for Pfizer. If you have a look, are these the top 3? Eliquis. Let's see if I move this here. So we got Eliquis, Ibrance. Okay, 4 billion. It's a lot. It's a lot for Ibrance as well. And what was the other one? Xtandi. There you go. True point. So we have 3. This one, and this one. You see, I don't even say the names because I don't know how to pronounce that. So these are they have a maximum price tag, which is determined by Medicare, and that is gonna kick in 2026 and 2027. So the near-term outlook is not particularly exciting because of this IRA, and the company now expects 1 billion in drop in revenue because of this change in the Medicare Part D regulation. So of course, they're saying in the 10K that this program, this change is facing legal challenges, and the final outcomes are not certain. So who knows? Again, let's assume that the program, it's banned by the regulation. Imagine that the pharma companies, they win in courts, and suddenly the Medicare Part D is no longer part of the equation. Is that going to turn around the sentiment? I don't know. You see, the impact is $1 billion in 25. So $1 billion, when you compare it to the 63 billion that the company makes in a year, is that enough to change the sentiment? I don't know. Probably not. This is my opinion. So probably it's not. So the other one is the 3OB drug discount program. So of course, the company is saying that contract pharmacies. So the issue with this is that this program requires drug discounts to hospitals and clinics serving low-income patients. And the company, I think, was complaining that some of them, were abusing this program. So they have apparently some contract pharmacy policies in place to avoid abuse by certain hospitals asking for a discount when they don't pass the discount to the customers. And then you have new federal and state rules could increase rebate requirements or limit Pfizer's ability to manage these discounts. So not particularly positive. And what else? Yeah, so this is for the states. It's the same. So the states want cheap cheap medicines, and that's the case for Trump. So I think there was, if I have a press release, let me just pull the press release. So Trump, we have drug prices, EU. There you go. So this press release where Trump is looking to cut the US drug prices to international levels. And I think there were some charts, maybe not in this document. I think there was a Bloomberg document showing you the significant jump between US and outside of the US. And some people can say, yeah, maybe the company is going to be able to increase price in Europe or abroad, and that's how they're going to keep prices in the US. I don't think that's going to be the case. I think the US is going to take the current snapshot and they're going to extrapolate it and say, okay, if you change it, it's up to you, but I'm going to look at the price right now, and that's how I'm going to determine it. In any case, this is a headwind. You know, it's not something positive. It doesn't matter if it happens or not. It's a headwind. So that's my point with from a regulation perspective. In regards to supply chain, I couldn't be worried about tariffs. I gotta say, it's not a major problem for Pfizer. There was a map. Let me show you the map. It's gotta be here. There we go. These are the map of the manufacturing centers. And there was a quote from the TD Cowen conference by the CEO saying that the company has 30 manufacturing sites in the US, and probably that's the largest manufacturing network of any other company. So yeah, the company manufactures drugs in the country, which is good. Particularly, I think in China they have only one in Taiwan. So that's good in regards to the tariffs. I don't think they have much exposure. So I don't expect a big decline in the top line growth for the next quarter. So we have earnings next week. I don't think the projections for Q2 this year are going to be horrible because I don't think they're that affected by tariffs. Okay, so I won't go into all these details. We have. I'm going to leave it for you if you're interested about learning for the remaining parts, you know, what's going on. I want to focus on the performance because here is where things get a bit interesting. So 10K has a very interesting slide where you can see the performance. I like it. They're transparent. I like that. I like the transparency. So Pfizer, you can see the performance over the past 6 years. So $100 invested into the company would account for 88 today. Ouch. And the peer group is about 177. So you can see the underperformance over the past 6 years, which is not particularly exciting, you know, if you're a long-term investor. I'm not. So yeah, in any case, yeah, the trend looks a bit, since 2019 is down significantly. All right, what else? So, okay, we already covered that. The financial metrics, they are worse than in 22. I wanted to show you this summary in the 10K. And of course, both revenue is down because of the COVID vaccines and EPS is down as well, mainly because back then it was quite profitable to sell the vaccines. Not so much anymore because, you know, volume is down considerably. So from a fundamental analysis, revenue is picking up. Let me show you a chart. Let me just open, I don't know, I think I have, do I have a slide for revenues? I have it here. So just have a look at revenue in Q4. It's up by 22% year over year. That's a big jump. You can see it here. So this thing is up, which is great. If we look at Q3 last year, up 31%. That's good. Okay, so revenue is picking up. And if you look since July 23, just look at the chart, yeah? Shit, I'm on the way. I'm gonna have to hide or somehow. I'm sorry if you cannot see the numbers. There you go. So 22 in Q4 and 31 in Q3. And this is great. Revenue is picking up. Great, yeah? Not so much. So let me show you something. I have a chart somewhere that is showing, there you go, the correlation between the number of Paxlovid. This is the injection for the virus. I don't know how to pronounce these things. I'm really sorry for that. So the injection for the virus or the virus, however you pronounce it, and the correlation with the number of COVID-19 cases. And that is the pattern over the last 2 years. Interestingly enough, Q1, we can see that there was a wave of COVID, which is great for revenues, right? Q2 was quite bad, and then you have another wave in Q2 and Q3, which ended pretty much at the end of last year. So if we look at revenue again, so let me just pull up the income statement. So we have last year, we got an increase in the last 2 quarters, and I believe that is correlated to this wave. Yeah. And of course, Q2 is up. I really don't know the exact detail on why Q2 was up 4%. Is it just noise? Maybe. So I'm not that concerned about Q2, but yeah, Q3 and Q4, we had a significant amount of sales from these 2 drugs. And in fact, if I was to go to here to FinChat, I can actually plot that increase. So if you go to segments, right? We go to this one, and we have to look at data per quarter, and you can see, wow, the drop is significant. So this is the revenue from the COVID vaccine, 37 in 22 and 5 in 24. Ouch. I was looking for quarterly data, sorry. So quarterly data, you can see here the trend, which is quite aligned to this slide. Yeah, so end of 23, beginning of 24, we have a significant spike. And then in Q2 and Q3 last year, we have a significant spike as well. So of course, when you look at, I think I had here the non-COVID revenue growth. It's got to be here. There it is. So Q3 last year, you exclude the revenue from the COVID products, and we have 14% operational growth. Yeah, versus the growth, which was 34%. That's the overall growth. So non-COVID products in Q3 last year accounted for half of the growth, and the other half was COVID-related sales. And this is not particularly exciting. I mean, it's good. Non-COVID revenue is going up. That's great. But still, the company is kind of like surviving on these COVID waves, which, they can still happen. I don't think, I'm not very bearish on that. You can still have outbreaks, but it's quite infrequent, and seeing here the spike in revenue, again, I have too many slides. I'm sorry for that. But if you see, there we go. If you see here the spike in revenue, and then you see another decline in Q1 because there are no waves of COVID, it's probably not attractive. At least to me, it's not attractive. All right, Q4 we have the same. So 11% non-COVID revenue growth, and overall growth is 25. So less than half was driven by non-COVID revenue, and that's not particularly attractive, at least not to me. I think I have here another chart. You can see there again, the number of cases. I think this is from the World Health Organization. Number of cases of this virus between 23 and 25. And you can see here Q2, Q3 picking up, and then the numbers in Q1 last year. And now it's down. So Q1 25 probably is not going to be a very exciting quarter for COVID sales. What else? So in the balance sheet, so we have scary net debt. So this is total debt. You subtract cash equivalents and short-term investments, and essentially the company is in debt a lot. 62, 46. They're paying back debt, which is great. I'm not concerned from a liquidity perspective, but the acquisition from Seagen and upcoming acquisitions that we're going to see in the next few years, I think that is going to pressure the company from a debt perspective. No liquidity issues. Again, I think the company is well positioned to pay debt. They have 20 billion, I think, 20 billion in cash and short-term investments. That's like 3 years of dividends, which is good. And it's fine, even though this is nothing compared to total debt, which I had a slide. Sorry for jumping too much into the slides. Total debt, 67 billion. That's the total debt. And the net debt after you pay that is 46. So it's pretty much this value, you subtract 20 billion more or less. 20. Perfect. What else? So we have the net debt to EBITDA, 2. So you need essentially 2 years of EBITDA to pay back all the debts, which is not concerning, but it's still a big amount. But it's not, again, it's not part of my bear case. My discontent with debt is because you have acquisitions, debt is going up, and that debt is going to increase the interest payments. And those interest payments are going to affect free cash flows. And if I have a look, you see these are the interest payments that are picking up. Free cash flows. I swear to God, I'm not going to have that many tabs the next time I do a video. The problem with free cash flows is that they're going to be depressed. Again, and that's my assumption here. So far it looks good compared to 23. So if I look at the annual trend, free cash flows are picking up, which is fine. It's about 10 billion, which is not bad at all. And 23 was only 5. And then, of course, you had the golden years when, it was 26 and 30 billion in free cash flows. So free cash flows are picking up. They're still below pre-pandemic level, which is not good. And yeah, I think if the company keeps doubling down on acquisitions to compensate for the loss of exclusivity on those drugs, this is gonna free cash flow, I believe, is gonna stagnate or maybe even go down. And that's my main concern with the company. When it comes to dividends, I have here an interesting slide. So do I have a slide? I think I have a slide somewhere where I compare dividends versus free cash flows. So if I look at the common dividend paid, it's a little bit high, I gotta say. So from a safety perspective, is it safe? Yes, it is safe, at least in my time frame, in the next 2 years. But dividends are a concern to me, mainly because free cash flow is slightly above what they paid in dividend last year, which means that, for example, years like in 2023, they had to get cash reserves. So they had to take money from there and pay it to shareholders. Am I concerned that dividend is going to be cut in the near term? Not, absolutely not. That said, I am concerned that it's not going to grow. So I think I have here some metrics. Just look at the dividend yield. It's crazy, 7.5% of that's the last year trailing 12-month yield. Next year we have projected 7.7%. That's high. Dividend it looks amazing, and when you look at the growth over the past 10 years, so this is the 10-year compounded annual growth rate is 5%. So 5%, the dividend was up each year, 5%. And that's the average, of course, because it's compounded annual growth rate. So the dividends are going up. You can see the history here, 10 years. See what I mean? So the dividends haven't gone down, and they have here an interesting metric, the consecutive number of years of dividend growth, 14 years. 14 years of consecutive growth since 2011, which is great. Dividends are going up, even if they're not, I believe they will not be increasing in the next years. I think they're going to stagnate. So this is something to consider as a risk for a bear case. But again, is a 7.5 dividend going to turn around this? I don't know. My opinion is that it's not. Because if it is, the chart will have been spiking to the roof, and it's not. So today's dividend rate is not enough for investors to bid up the price. So there you go. What else do we have? Free cash flow. So yeah, the company. I mean, we've already seen this. I'm not going to go through because the video is it's already insane. It's way too much. I don't think anyone's going to watch all this long. In any case, both operating and free cash flow look very attractive, I gotta say, and that's why I'm not that worried for a dividend cut. At the very least, we're gonna have, I believe, a dividend stagnation, but that's it. So capex is also stabilized. It was bad in 23, and now it's recovering in 24. And yeah, I don't think that capex is gonna be anything particularly concerning for the company, particularly considering that their cost-cutting plans. We have dividend yield. We already talked about that. So from a valuation perspective, just look at, is this the price to sales? Sorry, this is the dividend yield. And you can see the evolution for the last 6 years. It's crazy. I mean, this looks attractive, you know? Interestingly enough, if you were to flip the chart, it's almost the same as flipping this chart. So anyways, the red flag is that, yes, the payout ratio is over 100%. Yes, I agree. There are a lot of non-cash expenses, I have to say. So that's why I'm not that concerned to this metric, because of the non-cash expenses related to write-offs, set write-offs. And we had a few actually from the Seagen acquisition. I think there were like 2 drugs programs that were canceled or were stopped, and that was recorded as a non-cash. I believe it was a non-cash expense. I'm gonna have to check the 10K for more details. In any case, my point is that this is not concerning, at least to me. Most of that is non-cash. So this is the dividend compared to the free cash flow, right? From a valuation perspective, that's it. Company is cheap, you know. Price to earning, 16. Price to sales, 2. That's the all-time low in the past decade. And I think I can have a chart. Let me just show you those valuation ratios, because I think it's interesting to look at the past performance. Many people say that past performance is not important for future results. I don't agree with that, because if you look at the future metrics, like future PE ratio, it's like, how do you know the analysts are actually estimating the forward PE ratio correctly? How do you know that? Because if you look at the forward PE ratio for AMD and you look at the actual PE ratio and you compare them, the gap is like 200%, sometimes even 300% between a year to another. So that's why forward valuation, I don't trust Wall Street, you know, and you shouldn't trust me. So it's up to you to decide which valuation you take into account. So P ratio, there you go. Of course, this looks absolutely insane because of the way earnings are calculated. And when I look at the median, again, the median is not as important because you have these crazy jumps, you know, but it's undervalued. So right now, if we look at 2020, there you go. So it's right there below the median. Again, I wouldn't trust the median that much because of these discrepancies when net earnings were close to zero, or that's why you divide by a number that's really small, and P ratio spikes. So P ratio looks fine to me. 15, 16, it's actually quite attractive, I have to say that. And when you compare it to the competitors, this is the interesting part. When you compare the ratios with Eli Lilly, Johnson & Johnson, you see here that there is a competitor that is in line with Pfizer. So Pfizer, on a price to free cash flow basis, looks quite attractive, 12.7, which is good. To me, anything below 20, it's nice for the price to free cash flow. So yes, the company is nice. It's trading at an attractive valuation. On an EV to EBITDA, same. Price to sales, almost the same. And on a price to earnings is pretty much the same. Sorry, it's slightly more expensive, sorry. So my point is that, from a valuation perspective, it's cheap. You compare it either with the competitors or the median, the company's cheap. There's no doubt. And in terms of the narrative, and hopefully this is the last point of the video, So as I said before, we have a loss of exclusivity, which is about 17 billion in revenue, and that was discussed during the TD Cowen healthcare conference. Yeah, so I think there was a quote from the CEO, and yeah, so 17 billion is how much they expect that to hit the bottom line, which is a big amount. However, they believe that acquisitions are going to account for 20 billion in revenue, which is going to compensate for this value. IRA, 1.5 billion is an immediate hit. He said that probably 500 million are going to offset because of the incremental volume. So that's the headwind that I discussed before with the changes in the Medicare Plan D. Margin recovery. So if we have a quick look at margins, let me just have a look here. Gross profit margin is actually quite attractive. So let's look at pre-pandemic levels. Yeah, it was about 80%, 79, 80%. Of course, during the pandemic, when you have to ramp up operations for those COVID vaccines, margins they disappear, but they've been going up quite attractively. And yeah, from a gross margin perspective, the company looks nice. The issue that I have, at least, is net profit margin. And this takes into account non-cash expenses due to acquisitions. So if the company keeps acquiring new businesses because they lose patents and they have to compensate for the revenue loss, this margin, call me crazy, but I don't see the margin going back to 40%. And this is, again, the net profit margin. So that was my discontent when it comes to margins. And then you have, of course, the GLP-1 drug discontinued. I think they were, again, I don't have to know exactly why, because I wouldn't understand the results, but I think there were some adverse side effects, and I think that's why this was discontinued. And it's quite bad because, Eli Lilly, they have recently released the oral weight pill. So that's the one, orforglipron. Essentially, on April 17th, and just a few days later, Novo, who, by the way, had a phase 3 for this drug approved back in 23, but they paused it, they announced just a few days later that they're looking for the FDA approval, which I think they're going to get because phase 3 was already approved back in 3 years before. So that's going to be a thing that's going to be fine. And my problem here is that Pfizer will never challenge this duopoly. I do agree with that, but I do think that them trying to challenge the duopoly will have brought at least some optimism. And again, I look at the chart, will have brought some optimism to the shareholders. And I think that will have been visible in the chart. So I will be direct. If this drug will have been approved, yeah, so if they wouldn't discontinue the program, I will never closely think about shorting the stock. Not a chance. And well, there is more info here. What I'm saying, this is a nice statement. I really don't know about the potential of these drugs. So danuglipron was discontinued, but then you have another exciting programs that are currently undergoing. This one seems to be the one to keep a close eye on. And again, these are the drugs that were discussed during the Q&A. And I simply compiled the list, and that's it. And that's how I know that these drugs are important, because I don't have the knowledge to discern whether this is more important than this one, or So this is something to take into account. It seems that phase 3 is expected for 2025, Success could triple the addressable market. Okay. Potential mega blockbuster. We'll see. The only thing is that there is a gap between phase 3 approval and FDA approval, and when you start to commercialize it. So that's why, if that's 26, and 26, imagine that this is going to turn around the company, great, but my short is probably last 6 months, or it's going to last until January next year. So that's why, I don't see anything quick. I don't see anything that is, quickly going to turn around the sentiment. All right, so why am I not short yet? It's simply from a price action perspective. So if I look at the chart, I'm going to use a daily. And this is very simple. Yeah? So we have what I believe is a support approximately at 25. Yeah, from 2013, you have the pandemic sell-off, which was close to that 25, and then you have the price bounced quite a few times on that level. And of course, we had the breakout, so anywhere you can make this line as thick as you want. So we had the Liberation Day, PAM, shares went down, and usually I never react on the breakouts, never, because if you react there, the price can retrace